Hello, I'm Finola Burke from RaaS Research Group. And in this session, we're focusing on data analytics business, Pureprofile, ASX ticker PPL. Joining me to discuss the company's Q2 and H1 results, CEO Martin Filz and COO CFO Melinda Sheppard. Welcome, Martin and Mel.
Hi, Finola. Thanks for having us.
Hi, Finola. Thanks for having us again.
Well, Martin, let's just start with you. Pureprofile delivered 30% growth in Q2 revenue and to 15.3 million and 79% growth in Q2 EBITDA to 1.7 million, both records for the company. What were the standouts for you in the results, and has the momentum continued into Q3?
Thanks, Finola. Look, we're delighted, obviously, with the results of Q1 and Q2, and therefore the half is fantastic results. There are a few standouts in the half and in quarter two. Firstly, obviously, it's great to see the Australian market strengthening again and coming back, and our clients there, again, their clients are spending more, so a lot of research agencies. So it's fantastic for them, and I'm delighted for them, and obviously really pleased for us that's coming back. And it's still, it's over 50% of our market. So they're really pleased with that. So that's number one. Rest of the world obviously continues to perform exceptionally well, over 30% growth, which it's consistently over 30%. And that from day one, 4.5 years ago, is where we put our focus on being global, the biggest markets. So really, really pleased with that. How quickly the new starters that we added Q4 last year and throughout the year in the rest of the world have come on and started generating results. And that goes to show again the markets and clients thinking about Pureprofile want to come back to Pureprofile, which is brilliant. Automation is really starting to pay off in the business. And where I talk about automation isn't so much a platform, but I mean automation at back office, where we're being much more efficient, we're being faster, we're able to deliver better for clients at a more efficient rate. So you've seen that automation come on play, and therefore, again, another standout, that EBITDA growth exceeding the revenue growth. Brilliant. And then obviously amazing custodian of the company, Mel. We've got a cash balance finished at 5.1 for the half, and that's having paid for the first instalment of iLink as well. So we're strong cash at bank. All of the markets performing well, and that investment that we made both in people and technology paying off behind the scenes. Sorry if I didn't call out other standouts in the half and quarter as well.
And has that momentum continued into Q3, Mark?
Yeah, traditionally Q3 is a quieter quarter for us, and that's because historically we've had more of a reliance on Australia as a business, and January is a quieter month in Australia, summer and holidays, etc. But with that growth that we're seeing of the market share in the rest of the world, that's starting to even us out. So we're starting to see Northern Hemisphere, which isn't quiet during the January-February period, is generating more revenue for us. So absolutely, the momentum is carrying forward and the growth carrying forward for us, which is brilliant. And secondly, we're now seeing with that great share of Northern Hemisphere revenues, actually it even out that January period for us.
And Mel, the rest of the world is now 45% of total revenue. Do you expect to see this surpass 50% this financial year? And what's your expectation for across the board profitability in the international businesses?
Great question. So it is obviously highly possible that we could see that percentage of revenue from the rest of the world surpassing 50%. I mean, it's clearly, if you look at sort of the growth that those regions have had over the last 4 years, you can see that, the consistent growth is there. As Martin mentioned, a lot of the strong growth that we've had in the rest of the world has really come down to some of the hires that we made in Q4. So we had 2 new hires in mainland Europe in the Q4 and FY24, and then we've also hired a number of new sales roles in the UK in this financial year. So we're expecting to continue to see those investments pay off. So we absolutely do think that we could see that. That said, we did see a really strong result from our ANZ team. And so if they continue to grow at a strong rate, it's going to make it a little bit tougher for the rest of the world to kind of surpass them that quickly. And we welcome a little bit of healthy competition between our different regions. The other positive benefit that we've really seen is just really the FX impact of having an organisation that's doing a lot of business outside of Australia. So the weakening of the Aussie dollar has had a positive impact on us. It does impact some of our costs, but when the revenue upside, is converted at a higher rate, that does have a really good impact on us as well. Obviously, being and investing, making really measured investments outside of Australia really helps us do capitalise on that, the larger total addressable market.
Mel, how is the integration of the iLink acquisition progressing, and how does that set you up for future acquisitions?
So look, it's going fantastically well. It's been completely integrated into Pureprofile. So it's not a separate business unit. All functions are now reporting into, I suppose, what we would call Pureprofile team members, even though iLink is a Pureprofile business now. It went a lot more smoothly than we expected. The team culturally are very aligned to how Pureprofile is. So the integration was really smooth. We love our new team members. They're doing incredibly well. And we want them, we want to give them every opportunity to be successful in Pureprofile. Look, I think what's really been fantastic, it's been a good learning experience for us. It obviously was a small acquisition. It's given us a bit of a template for future acquisitions that come along. What are the things that we need to get right? Obviously, change management and integration is really important. And we think we did a really great job of doing that. You can see it in our results. It hasn't been a distraction for us. And in fact, actually, it's added to the top and bottom line as we expected it would. So it's been a really positive thing for us. And I think also for the team that came over as well. So great experience.
Martin, your investment and platform revenue continues to deliver strong growth, as you mentioned before, across both Australia and internationally. What other developments have you planned for platform?
Yeah, so there's a few things. I mean, firstly, it's obviously enhancing and updating our current infrastructure that we have, and that's a continual thing that we do. We've got a couple of new releases coming out, one of which will enable clients to much more simply dial into our data sources from their platforms. So that will open us up to more clients. Existing setup means that we connect actually to a client's infrastructure, and some clients just don't have that. They're not as sophisticated to have published what are called APIs. Whereas by us actually publishing our own one, it opens up that door to more clients being able to directly access our data set. So really excited about that. And then we've also got a number of new releases which are coming out February in a couple of days' time, which starts to play with pure data. So not just survey data as we do at the moment with clients, but actually either pure data sets using AI, and we've got some interesting partnerships with some US companies, or a combination of accurate first-party user data with AI created data. So we're really excited about that. And actually this quarter is a quarter that we've got a few releases coming out, and they will, we've already got some test clients on some and working through those. And we will start to see from Q4 actually a wider release of those. And the impact won't be until 26. But it's also early stages for us really becoming a data company in all meanings of a data company and moving away from purely being a survey company. So really, really excited about that. And the teams are really excited about that as well. They want to get involved with the latest technologies that are out there. And if that makes us more efficient, faster, open to more clients, and all the better. And clients are looking at us to give them advice as well, because they're reading about it and hearing about it from their clients and on the news, etc.
Martin, you hinted at, I think, in your release of some of these new products that you're launching in this quarter, and that you expect them to drive growth in FY26. So they must be meaningful. Are there any others that you can give us a sneak peek on?
It really, the way that we are seeing disruption in every industry occurring is around being able to do things in a much faster way, and not just purely AI. AI is just has given everybody impetus to think about innovation. And so for us as an organization, and we created the product team, we did an announcement for that a couple of months ago. We now have a specific product team which includes marketing and technical as well as product managers, and that's accelerating our pipeline. And where we see that is from two fronts. One is internally, how can we be much more efficient as a business and continue to see the margin expansion happening, obviously EBITDA growing faster than revenues and profits flowing down to the bottom line. And then the second one is about adding more string to our bow and more clients, cross-selling. We've got over 800 clients, so cross-selling those clients into new solutions. And the future of insights is around being always on, insights always being available. And that immediately lends itself to SaaS products, where a client can dip in and dip out and get a sense of maybe their brand, their consumers, their competitors, before maybe doing a deep dive where they want to understand something more. And for the first time, it's about Pureprofile being involved in that early stage research where a client can dip in and dip out of data. So they're the sorts of releases that we're looking at in the next few months that we'll bring to market.
And Mel, EBITDA margins have now squarely been back in double-digit territory for the past 3 quarters. And while Q3 is traditionally your weakest quarter, do you feel you have the momentum in margin expansion within the business, and what's driving that?
Yeah. Thanks, Finola. Yes, obviously, yeah, we've had a fantastic half, and that's really margin's been strong, and the revenue growth has really obviously supported that. Look, I think that the key thing with the margin expansion is really, we haven't focused on just one thing. Like, we have a number of levers that we pull to try and improve our margin. So, we talked a lot about operational efficiency and using AI to make our teams more productive, to allow them to spend more time on, higher value tasks for us. So I think that's an important thing. We're really starting to see the benefit of some of those 5 new AI tools that we developed last financial year. We're starting to see the benefit of that, obviously, within our business. We continue to invest wisely. So we have really measured investment. So every time that we're looking at what we're going to spend money on, we need a business case. We make sure that it is going to deliver in a certain amount of time. And that really helps us with that pipeline that we've continued to do over time, the continued investment in headcount. We're always seeing that benefit, 12 months out, 18 months out, 3 years out. So that's an important thing. Another initiative that we've had for a couple of years, and we've spoken a lot about this, we really focus on procurement for some of our larger suppliers. So now we're getting bigger. Procurement's a huge focus for us, making sure that we're getting, consolidating any spend that we can, making sure that we're getting the best pricing that we can. And then that obviously helps from that perspective. Q3, yeah, it's always a lower margin quarter for us. I think anyone that's been following us for a while, because of that, the seasonality that you see with Australia and New Zealand, particularly in January and February being a little bit softer, you do see that. And then we start to bounce back up again in Q4, which is, again, one of our stronger revenue quarters. So, the momentum's there. Our teams are working incredibly hard to grow the top and the bottom line, and I think the market's seeing that now in our results.
Well, thank you, Martin and Mel, for joining me today. I'm looking forward to catching up with you through the course of 2025 to check on Pureprofile's progress.